How much money down do you need for an SBA 504 loan? Well, it depends. If it's a startup, meaning it's a business that's been around for less than 2 years, then you're usually at 85% of total project costs. If it's a special purpose type of building and it's a startup, you're usually at 80%. If it's an existing business and you're expanding or doing a rent replacement scenario, then you can get 90% of total project costs funded. So that's really the breakdown of what you could expect leverage-wise on the SBA 504 loan. Hi, if you'd like to book a call with me and discuss SBA financing, whether it's a 7A or 504, or you just don't know where to start, maybe it's a startup business, you're buying an existing business, you're buying a franchise, you're building a new office building, you want to expand your existing business, we have multiple solutions. I can walk you through the 7A and the 504 and the SBA loan process. And if you have any other questions on any other types of financing, I'm happy to book a call with you. The link's below. Look forward to seeing you soon. Now, you can sometimes get the seller to carry back. And let's say you were coming in with 5% of your own money and you could get the seller to carry back 5%. As long as the seller puts that on standby, meaning that no payments are due for the term of the loan, which would be a long time if it was a real estate acquisition. If they would do that, it's more construed as equity in the deal. So you can do it that way, and that would be 5% of your own funds. Now, every bank, every non-bank SBA lender has different guidelines and buckets what they will and won't do. And they have different appetites on what type of real estate they're lending on for these 504 loans. Now, remember, 504s lend on hard assets versus the 7A, which is more of a tool to finance working capital, business acquisition with no real estate. However, we've talked about it in the past. You can use 7A for real estate as well. There's pros and cons for both. But essentially, this video is all about how much capital you'll need. And the answer is anywhere from 10 to 20%, depending if it's a startup and if it's a special purpose building. If you have any questions on a scenario that you're looking at executing on behalf of yourself or your business colleagues, let me know. I'm happy to meet with you over Zoom and we can discuss your particular needs and scenario, because everything is different, right? You're buying a self-storage facility, or you're expanding a self-storage facility, or you're an attorney and you've been renting for 30 years and you want to buy a building or build a building. Okay, these are all a little bit different. Every bank has different guidelines. Some banks don't like to do any construction, some love construction. So we'll dive deep into your specific scenario. So book a call below. And as always, thanks for watching another episode of the Investor Financing Podcast.